Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And this episode is brought to you by Coinbase Prime and Circle. More on those companies later in the episode.
So we're buying the Constitution.
Buying the Constitution. Pretty exciting. You know, crypto is really putting itself out there.
Yeah. Well, technically, I guess it's one of 13 copies of the Constitution, but it's the only one that's in private hands. Is that right?
That's right. It's in private hands. And I don't want to hear any of this, you know, you're not really buying it, like whatever. We're buying the Constitution.
Yeah, I think if you own the Constitution, you actually get to change the laws, as far as I understand it. So just expect a lot of upheaval in terms of, the Bill of Rights and things like that. I think they're due for a change.
What else can we buy?
I mean, if we can marshal enough capital to buy the Constitution, there's nothing we can't do at this point.
Yeah, I think we need to start buying some physical buildings.
Yeah, buying and renovating classic buildings, I think, would be a good next step here. There's a lot that are in need of that.
What about buying Niagara Falls and installing mining equipment at said waterfall?
That just, that's been discussed on the podcast before. We've received very negative feedback on the idea. I think that's out of the question at this point.
This was a huge week for the podcast. So the Midwest Tungsten general manager, Kevin, how do you say the last name? Annetsberger?
Annetsberger. Yeah.
Electric episode.
I mean, it's just a classic. That's really where this whole thing began. And it's very fitting that we got the GM of Midwest Tungsten, the general manager. And it was a good episode. I mean, he did say he preferred the sphere to the cube. So a little bit of controversy in there.
There were some pretty controversial things. I mean, he also suggested that he likes other metals, which was a little strange.
Yeah, Kevin had a whole list of other metals that he likes, so he's really not completely faithful to tungsten. But I liked the origin story. I mean, the fact that company began as a way to create coatings, metal coatings for various products was pretty interesting.
It sort of put me at ease because you've been, for the past 2 weeks, really worrying me in saying that tungsten might be deadly. And it turns out that he just completely dispelled that. I don't know what 4chan message board you read that on.
Look, I read a real academic paper about this town where all the children got, pretty horrible diseases due to tungsten supplies in the water. So I was actually pretty convinced. But, look, Kevin works for Big Tungsten, so, we probably have to take his opinion with a grain of salt here. But he did say that it was very safe to handle.
It seems like it's very safe when it's in its, if it's ground up, it sounds like it might be an issue, though. You don't want to be breathing in tungsten particles.
Yeah, and I found that so interesting. You can't smelt tungsten because its melting temperature is too high. And so you have to take the dust and compact it and then run an electrical current through it in order to make shapes. Sintering. Crazy. I mean, how cool is that? You can't even melt the metal because there's nothing to melt it in. There's no metal crucible that could contain the tungsten because it's the highest melting point of any metal. How cool is that?
Be amazing if there was a DAO to just do a leveraged buyout of Midwest Tungsten. Can you imagine?
Seems like they're a pretty big company. I mean, they don't even seem fazed by the cubes at all. It's a total afterthought for them.
No, I mean, there's an industrial market there for tungsten.
Yeah, there's a lot that goes into it. So anyway, basically all your tungsten facts are in that episode, more than you could ever possibly hope to know about it. But yeah, that was a great one.
That one was a lot of fun. It was a super busy deal week. Why don't we hop into it? The first one up is Consensus, the Ethereum studio launched by Joe Lubin. They raised $200 million. Sorry about that. By Third Point, Marshall Wace, Think Investments, Electric, Dragonfly, Spartan, Coinbase, and others.
Yeah, just a huge deal. Another enormous deal. Is this number 725? Did they actually raise that?
Yes. Yeah.
What the heck? Okay. So Forte, which is a blockchain gaming company, raised $725 million from Andreessen, Cosmos, C Capital, Core Management, Wagner Music, and others. Wow. That is enormous.
It's a lot of money. So you got to figure that's a lot of money that's going to be sprayed into developer ecosystems to incentivize people to build in this ecosystem. That's really got to be a big part of this thesis here.
Just 2 monster raises. I mean, there's the amount of capital being deployed this week is incredible.
The next one up is Alex. This is a DeFi project. It's built on stacks. They raised $5.8 million. It was a round that was led by White Star Capital.
And then we have another chunky raise, Starkware, which is, of course, the Ethereum layer 2 scaling solution. They raised $50 million from Sequoia, Paradigm, Three Arrows, Alameda, and Founders Fund.
Next is BetDex. This is a decentralized sports betting exchange. It's being built on Solana. They raised $21 million from Paradigm. Sports betting on blockchains, I think this is going to be a big, big use case.
Well, we thought it would happen with Augur, so maybe this will finally get there. But yeah, I mean, it was one of those touted use cases back in kind of 2015 when people would ask about what smart contracts are for. So it's kind of like a full circle moment. Next up, we have Cosin Labs. They're a blockchain R&D company. They raised $5 million from A16Z and Framework.
Next is Oasis, a layer 1 blockchain platform. They launched a $160 million ecosystem fund. It had the backing of Jump Capital, Dragonfly, Electric, and Pantera. Then
we have NEM, which is a blockchain-based project focused on user privacy. They raised $13 million from A16Z, DCG, Taser Capital, and others.
Next is Cypher. This is a futures protocol. It's being built on Solana. They raised $2.1 million from Sino Global, Skyvision Capital, and Blockwall.
Then we have Gemini, which is, of course, the crypto exchange we all know. They raised $400 million in a round led by Morgan Creek with participation from Parify.
Big raise there for Gemini. It's all the narrative is going to be the Winklevoss twins versus Zuckerberg once this company gets to be 2 or 3 times the size of what it is now.
Next up, we have Blockdaemon. They announced that JP Morgan and Tiger Global invested and that they also acquired AnyBlock Analytics to expand their NFT offerings.
Next one is BitDeer. This is a crypto mining company. They announced that they're going to go public. It's via a SPAC merger with an enterprise value of $4 billion.
Yeah, BitDeer is, of course, the U.S. arm of Bitmain, which Jihan still runs, I believe. And they have that big facility in Rockdale, Texas. That would be the biggest mining SPAC to date, I believe.
All right. And the last one up is an interesting deal. So DCG, Digital Currency Group, they announced that they've done a debt capital raise of $600 million. So this is, of course, on the heels of that secondary transaction that they did a few weeks ago. And at the time we said, hey, this is crazy. You know, they no cash on the balance sheet, but they're being smart about it, it looks like. So they've raised debt instead of equity. And I think this is a big deal for a couple different reasons. One is just, hey, more working capital for DCG's subsidiaries, like the trading business. I'm sure will benefit greatly from this war chest here. And the second thing is you don't see a lot of blockchain crypto companies going out and raising from traditional lenders here. And so I think you'll see more of it. Certainly a lot of these businesses are just phenomenal businesses with growing revenue, great margins. So maybe we'll see more action on the debt side of this market in the coming weeks and months.
Yeah, really sensible raise. Really interesting to see the debt market starting to fire up. Historically, fixed income investors have mostly avoided the crypto space. So big weekend news. I think probably biggest news item here is this bipartisan bill, the Keep Innovation in America Act. What a great name.
What a fantastic name.
So this is a great bill, and hopefully, I don't know if it'll be passed on a standalone basis, but hopefully it gets tacked on to something. Maybe the next multi-trillion-dollar infrastructure bill. So that basically fixes everything wrong with the most recent the Infrastructure Investment and Jobs Act, which had those controversial crypto provisions. So it's really cool to see them. It's bipartisan. So they changed the definition of the broker, which was overly broad. They clarify what information should be captured by a broker. They clarify the definition of digital asset. They alter the provision regarding reporting non-custodial transfers. So basically, it mitigates all of the really nasty provisions in the bill. And here's the interesting thing. It's sponsored by a bipartisan group. So, of course, Representatives McHenry and Tom Emmer, who are well-known, and Warren Davidson on the Republican side, that are well-known allies of the crypto industry. But on the Democratic side, you've got Eric Swalwell, you've got Ro Khanna, you've got Darren Soda, and yeah, so it's a very nice bipartisan effort that shows that there's considerable attention. Wow, do you hear the thunder outside? Wow. Yeah,
that's
like
crazy.
There's like a gigantic storm outside. It's a very strong bipartisan effort, and hopefully the House undoes the mistakes of the infrastructure bill.
So process-wise here, this is phenomenal that it's bipartisan. When does the lobbying effort start? When do we start to call congressmen? Stephen Lynch is already voting against this, probably. When do people start to mobilize?
I don't know if this is actually, because a lot of bills get written and bills, it was like 2% of bills that are ever authored actually make it into law or something like that. So, I don't think this one is actually on the legislative agenda yet, but it's a priority for a lot of these representatives. I mean, that's clear. So I think we will see it incorporated into legislation. And at that point, we'll fire up the engines. There was a survey today that said 16% of Americans have owned or traded crypto. So, it's a good number.
It is a good number. And just look at the demographics. We were talking to someone who was calling this out to us last week, is just look at the demographics in some of these districts. And, if you want that digitally native population to be supporting you, you're probably going to be well served to at least understand this bill before you vote against it.
This show is brought to you by Coinbase Prime. Coinbase Prime offers trading, custody, and financing tools for institutions. With trade financing, you can trade from cold storage instantly and acquire margin for lending and shorting. Coinbase Custody is battle-tested with dedicated on-chain addresses and industry-leading insurance. Coinbase Prime offers integrated trading tools, including real-time market data, smart order routing, robust analytics, and algorithmic execution strategies. To learn more, visit onthebrink.link/Coinbase. If you manage corporate or institutional funds, you're probably looking for ways to access opportunities in crypto. You see the growth and momentum and want exposure. But a lot of institutions don't know how or aren't comfortable with the risks of Bitcoin or DeFi. Now there's a new investment that's built specifically to help institutions get into digital assets. Meet Circle Yield. It's a blockchain-based investment built with USDC, the leading dollar digital currency. Circle Yield is fully secured and over-collateralized with Bitcoin to protect your funds. This also makes it a great fit for crypto institutions who want to diversify their treasuries and reduce risks while staying on-chain. You get your choice of terms from 1 to 12 months and a fixed rate that's higher than what you'll get at a bank or in many fixed income markets. Visit circle.com/yield to book a meeting with one of their experts. That's circle.com/yield. So in regulatory news, the Vaneck spot Bitcoin product has been denied by the SEC. So no real surprise there.
Yeah, so no real surprise. I don't think anyone was expecting this to get approved just based on Gensler's comments around the spot market and the fact that there's a lot of volume on these unlicensed offshore exchanges. But I guess we'll keep an eye on the Fidelity and the Bitwise proposals. Certainly Fidelity and I believe Bitwise have made compelling, cases to the SEC that CME futures Bitcoin market is actually what's driving the spot market. And so whether or not the SEC is persuaded by that, or whether or not those proposals are sufficiently differentiated versus Vaneck, I guess we'll have to see. But just doesn't feel like the spot proposal is going to happen with Gary Gensler.
Yeah, I'm souring on that one as well. The Lakers arena, formerly known as the Staples Center, is going to be now known as the Crypto.com arena. So we're still doing the buying sports stadiums thing.
I think we're going to continue to be doing the buying sports stadium thing. People were making a lot of comments around this is the top, this is a bubble, because we bought 2 sports stadiums? Come on. It's like, look at all these sports stadiums and how many of them are named after Web 1.0 internet or Web 2.0 internet companies. So it's a lot of them.
Yeah, the top isn't in until we've renamed every stadium in the US at a minimum after a
every
crypto
stadium
company.
Every single stadium is going to be a crypto company.
So this is
when is the Coinmetrics stadium happening? Can we get this TD Ameritrade thing, this garbage? Come on.
Yeah,
we got to get the TD. I mean, they haven't even turned on the spot crypto stuff yet. I mean, they told us 2 years ago that they were going to be doing crypto stuff, and they haven't done it. We got to rebrand that one. Let's go buy it. Let's go buy it with a DAO and rebrand it.
This is the new measure of success. It's not about this unicorn nonsense anymore. It's about $700 million 20-year deals to buy stadiums, because that's how long they bought the Lakers stadium for, 20 years.
I think that is that's a good deal, and hopefully it's denominated in dollars and they can hedge that.
Yeah, I mean, the thing actually that surprises me the most is that Staples owned the naming rights to this stadium. I mean, that's not even a Web 1.0 company. That's a physical brick and mortar company that sells office products. I mean, how did they get the cash to buy a stadium name?
I was at a Staples 2 weeks ago buying a printer. And it's unbelievable the high pressure sales tactics they will put on you when you're buying a printer.
Really?
It's like, get this 2-year warranty, get this thing upgrade. It's like, no, I just want the printer. Like, this is why I go to Amazon.
So the only reason I ever go to Staples is to print physical documents that most of the time you make me print and sign them. It's when I can't DocuSign stuff. I don't know why. And so they charge you like $2 a minute to like use the computer there and print stuff. It's crazy.
It's because they have to pay for this stadium.
Yeah. So I don't own a printer. I don't know why anyone would own a printer. And so I have to physically go to Staples to print stuff. It's nuts.
There are some of these transactions that you actually have to send physical paper still. It's just unbelievable that it still exists.
It's very vexatious in the extreme.
So anyways, I think we should file that one under ideas for future DAO purchases, just Boston sports stadiums. Just let's workshop that a little bit over the coming weeks. Next one up, let's talk about some clean coins. So the US DOJ is auctioning off $56 million in seized cryptocurrency. These are very dirty coins. They were from Bitconnect, the Ponzi scheme that you were all over back in 2017. But it's kind of like we say, you take those dirty coins, the marshals get their hands on them, they clean them up, they auction them off, and they're the cleanest coins you could ever imagine.
Yeah, so, I mean, pretty big sale. And I mean, I'm actually impressed that the DOJ has managed to identify at least some of the US-based promoters of Bitconnect and seize their assets. I saw some people chirping at the crypto industry, pointing out that, if the government can seize the coins, does that mean that this crypto stuff is invalid and doesn't actually work? I mean, you can always seize coins with significant effort. I think the point is that you're making it more difficult to sort of arbitrarily seize someone's assets here. And so in a kind of a low trust society, I think it's still better than the alternative. But yeah, kudos to the DOJ for chasing down some of these Bitconnect leads. I think there's just so many more Ponzi's that are going to take years and years to resolve here, unfortunately.
Some of these guys are still on the run, I think, though, right?
Yeah, I think the main orchestrators who have not been apprehended yet. I mean, it's the same thing with OneCoin, right? I mean, the ringleader there has never been caught, I think.
Yeah, he's still on the run. Joe Lowe is still on the run.
Is he really?
From what was it? 1MDB?
1MDB, yeah. Wow.
He's still on the run.
He's probably reinvented himself as an NFT trader or something.
He's probably a whale out there. Gerald Cotten's still on the run.
I mean, he, officially he's deceased, but
I don't know. Come on.
It's just, you never struck me as a conspiracy believer, Matt.
All right, so Quadriga, come on. That guy is definitely still alive.
He died in a horrible way in India, allegedly.
That's a lot of these guys are still on the lam. This is going to be fascinating when they start to reemerge like 40 years from now.
And I mean, if this stuff keeps going up, they're going to be barons, They're
going to be some of the richest people in the world. Yeah, for sure.
Well, not if David Chaum gets his way. So here's a piece I wanted to get on your radars. So David Chaum, has written an op-ed on Cointelegraph, actually, saying that, some scientists have achieved quantum advantage, as in now there are quantum computers that can do certain functions more efficiently than classical computers, which he thinks is very dangerous for blockchains and elliptic curve cryptography, which they all rely on. And so, I mean, it's interesting because David Chaum is really the grandfather of, much of cryptography generally, but, also cryptocurrency. And he's written this article, which went pretty much unnoticed, saying that basically all current, extant crypto assets are quantum vulnerable. So this is the most educated FUD I think you could produce, probably. This is like next level FUD. He does say that, his blockchain, the XX network, can, is quantum secure. There's also other quantum secure blockchains out there, or blockchains that advertise themselves as quantum secure. But it's if you believe what he has to say, he thinks Bitcoin et al. Could be in for a tough time here with the quantum FUD.
Well, Chaum is a lot smarter than me, but I think this is a little bit self-serving. I mean, my view on this has always been that we would see this coming from a long time away, and there would be forks to upgrade to quantum resistant schemes. And so I'm not that worried about it. I also think it'd be interesting. The Satoshi coins, which are not protected by P2SH, would be probably the first ones that would be vulnerable. So maybe that's sort of the canary in the coal mine if quantum starts to emerge. But we'd have other problems. I mean, Bank of America, the electrical grid, like everything would start to break, I would think.
Yeah, so that is a good point, though. People do think that some of the Satoshi coins and other early mined coins were pay to public key instead of paid to
script hash.
No, pay to script hash was a later innovation, but that was introduced in 2012. But they weren't pay to public key hash, so they were basically unhashed addresses. And the nuance with the quantum is that, in theory, elliptic curve cryptography is vulnerable to it, which are this, of course, the would give you the ability to decode a private key from knowledge of a public key, in theory. Whereas SHA-256 is not considered quantum vulnerable. So if you are hashing your addresses, in theory, again, you are not vulnerable. But there are estimates that a very material fraction of all the Bitcoins are kind of exposed in this manner if you were to break elliptic curve cryptography. And Schnorr would also be vulnerable to that. All of that said, I think you're right. It would be a gradual break if there were a quantum break. And also, there are quantum resistant algorithms and signatures.
There are, right? So they exist. So should we be that worried about it?
Yeah, so I think there would just be a huge scramble to upgrade as this occurred. You could always just sort of freeze the blockchain and create the same address space on an alternative model with quantum resistant signatures. But it's funny to see David Chaum. I mean, he's one of the most credible voices in all of cryptography. So, I mean, of course, he's got his own self-interest here, but it's definitely something to consider. But if his blockchain works, and the issue with the quantum signatures is they're too big from a space perspective. So if he's able to get them down, then he's basically doing R&D for Bitcoin. In the ultimate event that we need to move to a quantum resistant model. So I don't see the issue here, really.
Yeah, I'm not that worried about it. Another really thought-provoking article this week was from David Andolfado. He's at the St. Louis Fed. So he put this piece out called Run-Proof Stablecoins. And I guess I'll set it up a little bit. So the premise, of course, is that stablecoins can be backed by a bunch of things. Like there could be commercial paper in certain stablecoins. Obviously, we've kind of moved away from that a little bit. And the US regulators in particular are wanting that to be just cash in a bank account. But there are some out there, Tether would be one of them, that have the ability to have runs on the bank, so to speak, because they hold commercial paper. It's not immediately liquid. So he uses this analogy about a crowded movie theater. And so if you had someone yell fire in a crowded movie theater, you'd basically have a stampede, and, some people would get out, but a lot of people would get trampled. Now he compares that to, what if you had a market-based solution where, depending on the type of ticket you buy, you just stand up and you get into an orderly line. And if you pay more, you get a ticket that says, when you stand up in an orderly fashion, you get out first. And so his kind of thought experiment is, what if you could follow that logic train where, most people would get out? There'd be like 3 or 4 people at the bottom of the line that would get trampled or wouldn't make it out in a fire in that situation. What if you could follow that logic through to investors in stablecoins or stablecoin holders, where you could have smart contracts adjudicate where people sit in the preference stack if there's a bank run? So if you're paying a little bit more, you're definitely going to get your money out on a March 12th type of a situation. So I thought that was interesting, and certainly it's possible, right? Like technically that's possible. Whether or not there's a market there is another story.
Yeah, I mean, we've seen innovation in rendering banks run-proof for hundreds of years here. It's the same concept. It's if there's a liquidity crisis, can you make a credible promise that you will be solvent to your depositors, and persuade them to not redeem immediately, right? And so, I think we talked about this on a prior episode. We talked about the option clause with the Scottish Free Banks in the late 1700s. That was an early innovation. So they would effectively, during periods of illiquidity, they would suspend convertibility, and instead they would actually pay interest on the notes for the duration that there was a suspension. So depositors would be rewarded for sort of bearing with them type thing. And so, there's definitely ways for unregulated or private banking systems to eliminate bank runs with temporary suspensions of convertibility. Tether actually has that, I believe, in one of their current clauses. Their ability to unilaterally suspend convertibility. So yeah, there's non-state regulated ways to effectively ensure stability in bank-like systems, or stable coins. It's just a matter of looking historically at similar such structures. There's also Larry White has written about this. You could give people a pro rata claim on the underlying, as opposed to redeeming, having them hold notes that are redeemable for $1 on demand, and to the extent the NAV sold off or had impairments, you would simply allow them to redeem their pro rata share of the assets, which would stop the run. So there's other structures out there which stablecoin issuers could sort of experiment with.
Yeah, that the reality of it is, in this crypto market right now, at least, if there was one of these issues with one of these stablecoin providers, they would just issue a token and they would monetize it through just the creation of a new asset is kind of the brute truth. But, it's an interesting thought experiment.
Well, that's what Bitfinex did, of course.
That's right. So that's what you would see.
They made the LEO token, and that eventually made everyone whole. Bitfinex also, when they were hacked in 2016, created these, what were they called? Do you remember? Reserve rights or something, which was a claim on, I believe, future recovery rights, maybe. Anyway, so you can always issue additional debt or equity or a pseudo form of those two things in order to cover an immediate near-term liability. That's for sure. So politicians in both Sweden and Norway this week have agitated against proof-of-work mining, saying that Sweden, they're saying that they need an EU-wide ban on proof-of-work, even though it's really not very popular in Sweden or Europe for that matter. And I find it actually kind of backwards. So the Swedish politician's claim was actually rebuked by their own power company, interestingly, by one of the state-owned power companies. But the thing is that both the Swedish and the Norwegian grids are very renewable. And so if they ban proof of work in their specific jurisdictions, it's not even that popular there. But if it became popular and they banned it, then they would effectively be subsidizing dirty mining in places like Kazakhstan or Iran. If they permit proof of work mining to occur in their relatively clean jurisdictions, that is working to the disadvantage of mining elsewhere, because it's a pretty perfect competition. There's only one pool of Bitcoins you can fight for every day. So perversely, if you ban Bitcoin mining in your renewable electricity grid, you're actually increasing the carbon intensity of Bitcoin overall. So they should really be subsidizing Bitcoin mining locally, or at the very least doing nothing.
Kind of like the same thing that's going on in New York, right?
Exactly the same phenomenon. Yeah, New York has lots of hydro. So I don't know how to communicate this to them, but it's a pretty simple idea. And basically they should read my CoinDesk articles.
It's just shocking that these policymakers are not reading your CoinDesk articles before they do things like this.
I don't know what's going on. They need to consult with me first.
What's the status here? So we're taping this on a Thursday evening. When are we going to find out if this constitution is moving hands?
So the auction is in a few minutes, actually. And I strongly suspect that the ConstitutionDAO will win, because they've raised over 45 million, and they apparently have some more in reserve.
Because you have to. That's a big downside of this DAO structure, is that if people know that you have 45 million, they'll take you up to the limit, and so you need to have a little secret stash on the side. That's
right. So there's an undisclosed additional stash that they'll use strategically to win the auction. So by the time this episode comes out, we will know whether they were successful or not.
And if they don't win, I would have to think that the villain here is going to be having a tough social media day, whoever does win.
Well, I think they're going to win. The question is, what do they do once they win? Because it's like a dog chasing the car. What do they do if they catch it? They don't know. They don't have a plan. I mean, maybe that's a little unfair on the DAO, but the plan is basically to identify someone that will take care of the document and maintain it and display it, which is like not necessarily a small task.
Well, don't you think that there would be a museum that would be interested in having the Constitution?
It just seems like a lot of work to obtain the Constitution and keep it safe. I mean, I wouldn't do that for free.
I mean, you've got to have like a university that would love to do that. I'm sure there's museums out there.
So they're just going to have more work on their hands. I mean, they said they're going to let the DAO vote on it. There's a token involved, of course. So, it's so funny to see the media. They love to write about the weird things that crypto people are buying. They wrote about the cubes. I got interviewed about the cubes again this week.
Oh,
incredibly.
Nice.
They made fun of us for, all the NFTs that people are buying, and now they're making fun of us for the Constitution thing. Well, they're mostly sort of baffled by it, I would say, is the predominant emotion.
I think the mainstream media getting their hands around DAOs is going to be an interesting journey. This is not going to be the biggest thing a DAO buys in the next year. I can tell you that.
It was definitely organized in kind of a slapdash manner. This one was very short term. I mean, it's only been around for a few days. It's incredible they amassed so much capital here.
It's incredible how fast the crypto community just moves. I mean, this went from being something that was just chattered back and forth on Twitter to being a real thing very quickly.
Yeah, when I first saw it, I was certain that they would not raise the capital, and now it appears that they've got 50+ million to deploy here. So
it's shades of like the original DAO. I mean, I remember as that thing was gaining steam and raising more and more capital, there's just a lot of excitement. Obviously, the mainstream media wasn't covering the space at that point, but that was a wild time.
I remember reading about the original DAO in the press, though, for sure. I thought it was cool.
Yeah, it was, the angle on that was just, here's a decentralized venture capital fund.
Yeah. I mean, in hindsight, there were a lot of missing pieces there. I mean, frankly, there's a lot that remains unknown about how DAOs will operate today. But I guess we're going to find out.
Larry Sukernick and Derek have a really good podcast on DAOs that I would highly recommend people check out.
Yeah, shout out to a new podcast. I think it's called I Pledge Allegiance.
It is called I Pledge Allegiance.
Yeah, they've done 3 episodes so far, all very good. So highly recommend.
We don't often pump other people's podcasts, but I like that one. And then Patrick O'Shaughnessy has a new podcast that he's doing with Eric Golden on NFTs. The name of that one is Web3 Breakdowns. I also thought that was a terrific one.
Okay, so we're spreading the wealth here a little bit,
All right, so I think that's it for the week. By this time next week, we'll know if we have a constitution or not, and we'll be making progress towards buying TD Stadium and renaming that something else.